Hi everyone. We've been doing a series of open houses around OCEN 4.0. We started around with what OCEN is, how OCEN 4.0 will have an impact, introducing the concept. We went through the tech specs. We explained the role of a borrower agent and how a borrower agent will have an impact on the OCEN framework and MSME lending, cash flow lending with MSMEs, right? And we did an open house with lenders. Post that, we've started with open house between Sharad and the Yogro team. And here I am with Lizzie, who's been the co-founder of Zets Money. She's also working on a stealth startup and doing a bunch of stuff. And I don't think she needs an introduction in the fintech space. She's been around for about 12 years and most people know her. So we're going to be talking about OCEN and what are her thoughts with respect to OCEN, MSME lending and everything around it, right? So over to you, Lizzie. I'll start with a basic question. Have you heard about OCEN? And obviously you have. So what are your thoughts around OCEN? You've been writing content for the past few weeks, and I've seen a few posts that have been going around with DPI and all. So what do you think? And what are your thoughts? Let's start with that.
Yes, and maybe I'll give a bit of a bigger picture, a longer view. As you said, I've been in and around fintech in India for the last 12 years. And when I first arrived in the country, very excited, very, very naive, we really just did not have the infrastructure that we have today, right? That was very apparent. And so the early pioneers in fintech were all about building that infrastructure. We spent a lot of time in the early days trying to convince, frankly, even credit bureaus to make their products more digital, more accessible, such that we could create digital infrastructure for the purpose of digital lending. And I put, the best part of the last decade into that endeavor, because I believe passionately that unlocking credit supply in this country will be one of the biggest economic drivers that we will see in our lifetime. What's happened in the last even 5 years, I would say, is something very dramatic, almost a revolution in the availability of digital infrastructure. And it's across every aspect of the journey that relates to credit and digital lending. In the early days, as you know, we saw massive leaps and gains in the world of KYC. When I first started, KYC was a guy coming to the house collecting physical documents. Today, we have n number of digital ways to verify and identify a borrower, and that's made such a huge change to the way we think about risk and identity. Then over the last 5 years, we've seen this plethora of data emerge. The way that this country has digitalized data sets such as GST, the way that we have access to transaction data, UPI data, and the quality and coding of that data is truly some of the best in the world. Very few other markets on this planet can provide such streamlined data sources for the purpose of underwriting. I think the missing piece, and what I see when I look at things like OCEN, the missing piece was bringing all of that together. How do we bring together these sources of identity verification, sources of really robust data for underwriting, plus, and I think we'll talk about it today, some of the operational aspects, like how do we do better, more intelligent digital collections, bringing together that infrastructure in a sort of open source platform that literally anyone can plug into, was what was missing. And finally, we have that. And its time has come, right? Because you needed, I think, that entire ecosystem to develop to this point, and then plugging in those gaps to finally create the excitement, the support, and the need on all sides of the credit triangle. And that's what I'm most excited about. I think things like OCEN give finally tools to lenders to really play around with their products and create products that truly solve the use cases that we've been looking at, all of us, for years and years and years. I don't think we need to talk about the need. The unmet need is still absolutely insurmountable. Whether you look at any consultant report today, you're going to see that there is a credit gap in this country, and the 500 billion, trillion, whichever report you look at, I think only 11% of MSMEs receive formal access to credit today. And so what we need to all do now is work together as an ecosystem to truly solve that credit gap by using this infrastructure. And that's what the promise of OCEN is, to all of us fintech geeks that get very excited about this stuff. So thank you. Very, very pleased to be here today and learn a bit more.
Thank you. So you mentioned about richer data sources and how new products can be created with this richer data sources, right? One thing we believe at OCEN is that there will be a Cambrian explosion of product. The 30 or 50 or financial products that are there in the market will go into probably the next few levels deeper, where business financing will become a PO financing, and a PO financing with collections control on a particular platform with a different data set in a different industry, right? So each of it, which we would call it as a product, and how this will be enabled. Obviously, you've been looking at the borrower agents and how a borrower agent and a derived data partner can go ahead and unlock that data to the lender very easily with the OCEN framework. You've obviously been wanting to do this in the past. How difficult was it to get this thing done, and how expensive was this process, both in terms of time and cost?
No, look, many of the first wave of fintechs in this country were literally solving this precise problem, right? When we started Zest, this was exactly the challenge. How do we formally aggregate and organize the data sources that are available, analyze them, package them in a format that a traditional lender can actually consume and use in a sensible and productive underwriting process? And frankly, the first 5-7 years of fintech in this country was all about doing that. It was enormously challenging. I will tell you that. It was enormously challenging. In those days, early on, we did a lot of scanning of people's bank statements and having to use extremely archaic forms of technology to verify that data was even genuine, as you can imagine. You remember the days of getting people's salary slips, all of this, very, very physical type of data aggregation that was going on. What happened is a lot of that got solved on the consumer side, okay? And this, we saw a very, very fast development of tools and products and infrastructure companies. I'm talking of the likes of, Perfios, Akarza, Finbox, a plethora of infrastructure players who made it easy for consumer digital unsecured lending to take off because they packaged and supplemented that data in really consumable ways. We didn't see quite such a push on the SME side, I'll be very honest. And I personally think that was partly to do with the investor ecosystem. They always got more excited about consumers than MSMEs, I'm afraid to say, but that's shifting. We can talk about that. But it just was always a harder problem to solve as well. If you think about the type of data we're talking about, it's a lot more unstructured. We're still looking at a lot more cash-based transactions, right? So consumers, you can easily see a salary credited to a bank account. In most MSMEs, you will see a significant amount of cash inflow and outflow in physical cash. And that was always a tougher nut to crack. So I'll be honest, I think as an industry, we fintechs were a lot slower to solve the MSME problem, okay? A few people made some leaps and bounds and you saw some good work on things like invoice financing, but otherwise, honestly, I would say our scorecard was poor. We didn't work hard enough. The unsecured consumer piece is solved now, and you've seen this, rampant adoption of these products across LSPs, even e-commerce companies, you name it, right? Finally, we're at that point where I think we now have what is needed to do exactly the same unlock for MSME. The data is ready, right? Thanks to things like UPI, lots of small merchants now, accept far greater percentage of digital payments. So we have a much greater, digital track record. The digitalization of GST has been absolutely, phenomenal in terms of providing rich underwriting data. And then bringing that all together, building these infrastructure pipes has finally made this data consumable, really only in the last sort of 3-4 years. I also see a real sea change in the way that traditional lenders think about this data. So perhaps thanks to them finally adopting the unsecured consumer data sets, the openness now to looking at what used to be called alternative data, but frankly is just a digital, version of traditional data. The openness from particularly NBFCs is so much higher today, which means that they're actually very, very willing, very excited, and very keen to extend greater credit products and innovation to MSME, provided that they have the infrastructure, and that's what we're all about here today, to do that in a very safe and very auditable way, right? And that's the important point. I think everybody loves to bash the traditional lender world and say, oh, they don't understand the MSME opportunity, they don't understand small ticket credit, they've not been very good at solving this problem. That's not true. They just need to do it in a way that does not create undue risk for these entities, does not create credit bubbles, and is frankly done in a way that's auditable, transparent, and has good oversight. And that's why digital infrastructure is so important. So I'm very confident that we're at that tipping point now. We're going to see a big shift over the next few years in the appetite for small ticket MSME credit products from traditional lenders. And I think all of us in the industry need to be ready for that and come to them with innovative product ideas and ways of distributing these products in a very, very low cost and seamless manner.
So if I take a few keywords from what you said, you spoke about alternative data,
Yeah.
you spoke about infrastructure, you spoke about low cost, and you spoke about technology. These 4 or 5 keywords are very apparent from what you spoke. So my belief is that a lot of this has to do the way they have been serving MSMEs, or the MSMEs have been served with a formal credit. There have not been enough products. They are put into 1 or 2, 3 buckets. They are, because they are so fragmented in nature, there is not good products around, not the products, the infrastructure products around aggregating them, and hence people tend towards a bigger chunk, which is obviously the personal finance that goes through. Even if it is a GST based thing, it has now become a bigger chunk, and obviously because of digitalization. But there are sets which are highly profitable, which are like we've had the GEM pilot there, right? The GEM data is worth gold because that's real transactional business data, although you don't get it at a transactional level, but you get it at an aggregate level. But the past 6 months of purchase orders or next purchase orders assigned to them is worth gold when you look at it. And obviously we all fall back to the standard 3 years ITR in terms of underwriting. What do you think will require, and all okay, now obviously unlocks a lot of this at the borrower agent front, where portals or companies having transaction volume through them, and we all talk about embedded finance and all of this. What do you think will make this change from the whole infrastructure, the underwriting, to be more specific to take these data sources, and the shift in the mindset? Or how do you think this will scale? Or do you think we are still away from doing that? What are the drivers towards doing that, and how should we enable that?
I think it's really interesting you say this. Actually, again, it's very easy, especially for people in technology, to sort of disparagingly talk about how traditional lenders are not doing their job, and they're not understanding that this data is available. Traditional lenders are not stupid, right? They've built fantastic businesses. Most of the banks and NBFCs in this country have an incredible track record of risk mitigation. They also are very, very focused on controlling cost and OPEX. And let's be brutally honest, the idea of extending a 50K credit line to a coconut seller in most parts of this country was not viable from an OPEX and risk perspective, right? They don't operate their businesses in a way that they can have people roaming around signing up the coconut seller, the chai wala. It's not a feasible business model. The costs would wipe out the ROE, and we have to be realistic about that. What you're describing and why it's so exciting is the idea of actually removing this OPEX headache, removing these distribution and collections challenges by providing digital rails. And the Gem Sahai example is brilliant. And I really hope that we can, spread that more widely and replicate it more aggressively, because what that does is just create, digital version of a traditional marketplace, right? So imagine literally physically a traditional market where you'd have your vegetable sellers. There would always have been a very traditional money lender roaming around in that environment with a very low operating cost, dispersing and collecting his credit, right? What you've done with the Gem Sahai portal is create a model where you can digitally replicate the marketplace. Any lender anywhere in the country can join that marketplace, and using digital infrastructure, actually with a very, very low margin, understand the dispersal and collection of even a 50K credit to that customer. I think what is still missing though, however, if I have to be a little bit balanced or somewhat critical, is the innovation on the product constructs, right? So I think we're all agreeing that finally the mechanisms for credit underwriting, so the quality of data, the availability of data, the aggregation of data is being solved. I think we also agree that the dispersal process and collections process can be heavily solved through these platforms like Open. But what we still need traditional lenders to do, I'm afraid, is use their imagination about the way that products are constructed. And this is something I'm very deep into at the moment, because the more I go deep within this problem statement and understand why is it challenging for a bank or NBFC to extend, say, a 50K credit line? What exactly are the blockers today? One of them is the way that their back-end systems work is very based on traditional old-fashioned product constructs, right? So you had a working capital loan, which looked like this, and it sat in a box. It's had a very, clear definition. You had a personal loan, and it looked like this. You had a loan against property, which looks like this. And their systems are structured in that way, which meant when, people like you and me came along to a bank or fintech, Bank MBFC, and said, look, we've got this great idea, a revolving credit line that can be based against cash flow, can top it down, collect this way. They'd say, but it doesn't fit. It doesn't fit within the product constructs that we have. So I think what I'm saying is it's not just about solving the data challenge and the distribution challenge. We also now need to work as an ecosystem to help with the deep tech that goes on in the back end of most financial institutions, and make sure that they have the ability to configure products that truly solve the use cases that we know are still ginormous gaps. And I think if we can do that, then we get that even bigger unlock, because the readiness is there, the risk appetite is there, the push is there from above. I think most banks understand that the priority sector lending is one of the most, economically important segments. But they do still have some challenges, I'll be honest, on understanding these product constructs, because their banks have not been built that way historically. So I'm afraid that's the next piece of work we have to do together.
So, Lizzie, you bring out some of the important points. So I didn't mean that lenders are not aggressive or they don't understand this. Obviously, they've been enormously successful at what they've been doing, and we've, as a country, progressed and reached where we have been. I mean, there is no disrespect for that. But what you're effectively saying here is that, there was always a cost challenge with respect to working with these short ticket loans, which in a way have been solved by platforms like OCEN, where you have shared borrower correspondence, richer data available at a much cheaper cost, and done that. But there is still a huge gap, in terms of mindset, because they tend to base off the newer thinking of what they've been doing. So this has to be ground up thinking, is what you're saying.
Correct.
And it is, even if someone wants to do that ground up thinking, there are not enough tools to kind of go and build internal systems which will do these things.
Yeah.
So what do you think the next flavor of fintechs will do? Since you are a fintech and you've been in this space, what do you think the next flavor of fintechs will do for the next 5 things, and where the opportunity for fintechs is here?
Yes, and this is really important, and I think you've spotted I've completely immersed myself in digital public infrastructure over the last 12 months. I think there is nothing more important in the world of technology right now than how we use digital public infrastructure to drive financial inclusion, financial penetration, and therefore economic development. I can't think of a bigger, more important mission and project for all of us to spend our time and our careers towards. I think what we now need to do is think much more futuristically as an industry and an ecosystem. And I think a lot of fintechs have had a bit of resistance to DPI, honestly, because their bias was that as fintechs, we're building infrastructure. We don't need, third parties to do that for us. And I think what I want to talk about today, and I hope this is something that iSpirit is also pursuing aggressively, is the idea that platforms like OCEN actually provide more opportunity for fintech innovation than limit, right? There is now no limit to what can be done if fintechs are to embrace this infrastructure and build around it. So I think the entire concept of the borrower agent is very early, and fintechs are not looking at this model deeply enough. There is some very, very interesting ways that fintechs can participate in that piece of the pie. And I think there's a lot of the product innovation that is going to come from that side. So I would really strongly encourage anybody who spent the last few years building any type of, middleware or intermediary technology in the financial services industry to look very seriously at platforms like OCEN and think about the borrower agent model. What could that mean longer term in terms of product innovation and entire areas that I still feel as an industry we've done so little to push forward, right? So best example right now is collections, everything around repayments and collections. Honestly, fintechs have been very lazy at pushing the boundaries here. It's still a very traditional industry, sucks up a lot of cost and affects a lot of the challenges in the product development we're talking about. If you talk to any banker today, they will still say, from a collections perspective, we will always prefer larger ticket, longer term loans, right? And that's frankly, again, back to logistics, OpEx, all that boring stuff that fintechs don't like to talk about. But if we are truly going to solve this conundrum and see this unmet need met, we have to provide as attractive infrastructure for things like collections that we've done for the onboarding piece, right? So we've all made these super snazzy onboarding modules where a customer can, in 3 clicks, create a loan. We've done wondrous things in KYC and identity, but then we get to the other side of the lending cycle and we think about how do we get the money back, and very, very little technology innovation has gone into that piece. So I want this borrower agent concept to evolve, maybe it needs a rebrand actually, into technology innovation for the lending ecosystem. I think that's where a lot of fintechs should be playing a bigger part. And that's how we'll truly drive adoption. Let the lenders do the lending and let the fintechs come in and build these solutions and sort of technology unlocks to provide a much, much greater and better product experience.
So a couple of things, right, from what you spoke last. One is about intermediaries, and these people act as intermediaries in some way. And I mean, most public platforms or most network talk about ruling out the intermediaries. However, our philosophy is not that intermediaries are useless. I think intermediaries are a big value add. You got to fix the role and the incentives for them to work. And as long as everyone makes money and everyone scales, the ecosystem expands, the market expands. But you have to obviously weed out the bad ones who have not been playing by the rules of how intermediaries should play, or probably an intermediary should not become as powerful as they control the entire market, right?
Correct.
So the borrower agent. And second, you speak about collections, right? So one thing that we say is that a T4 product where there is purpose control and collection control, more specifically, at least collection control, which is a T3 product, is what we prefer to be on the OCEN ecosystem, right? Just like there is tax deduction at source, there should be collection at source, where you should not have to worry about collection as a lender for a low ticket loan, because again, we speak again and again about having fixing the problem of the cost of acquisition, serving, compliance, regulation, everything, right? Regulatory compliance and everything being very low for a loan to be profitable. And you spoke about big lenders not being foolish. Definitely, they're not foolish. Even if they want to serve the small market, and we've done a blog around this, saying that market is the low ticket market is not served because these costs are very high. They surpass the income that could be potentially there, and we hope we've done enough to reduce this, and we'll continue to reduce it to a point where it becomes very viable. What do you think about intermediaries and the role of intermediaries? How do you think this will change phenomenally? Because the traditional DSA model of sourcing leads versus a borrower agent model, what are your thoughts on?
Yes, yes. No, and I think you're right. I think it's again, it's become a bit sort of fashionable to say, why is the government building all the intermediaries, and what does that mean for us, and how do we fit into this ecosystem? So to me, the obvious answer is the concept of an intermediary needs to evolve. It needs to become much more value add, to your point, to make sure that you're genuinely adding value, i.e. improving the profitability, improving the ROE of the product, such that you get a piece of that, right? If the bank today is spending 12% in OPEX, but an intermediary can reduce that to 4%, then there's a massively profitable opportunity for the intermediary to create a very, very exciting and scalable business that can be extremely profitable. So I think we have to look at the concept of intermediaries in a completely different light. Intermediaries in this ecosystem should be the most advanced in pushing the boundaries of technology, right? We should be the ones looking at things like generative AI. How can we bring much more intelligence to, say, the matching process, right? That's something we used to focus on a lot at Zest. Every lender will have a different, taste for what they like in terms of the types of loans, the types of segments, the types of ticket size, etc. A very intelligent intermediary can bring a lot of AI and intelligence to routing the right loan to the right lender. For example, I see hardly anybody, worrying about that problem statement. It's something that we just haven't gone deep enough into. So I think it's time to really kind of rebrand this idea. Stop talking about middlemen. Stop talking about, DSA plus, because all of that sounds very old world and it's not very exciting for technologists. But instead, let's focus on what a really intelligent technology platform can provide in terms of intermediary services, and make it these platforms the ones that push the boundaries on the product innovation. Because if we are the ones that are able to do that, if we can provide, some of the products that we're looking at designing at the moment are all about how could you create in literally minutes, not weeks or months, new products, new offers, new setups within a bank, within a lender, using very advanced AI technology. It's very, very feasible now to think about these systems. And that's something that the intermediary should be playing a part in. So not just the aggregation of demand. It's not just about being a sort of middleman between supply and demand. It's about how do you more intelligently, for example, price risk and match risk to the people that want to take the risk, for example. So lots and lots of work that can be done in this space. But I think it also requires an ecosystem mindset shift. And frankly, I have to say this, it needs a change in outlook from investors who always prefer to finance businesses where they touch, the customer end to end. And I think that has to change. We have to move towards investors understanding that being part of the value chain can be as valuable and as profitable as owning the value chain. And therefore fund businesses that are playing a really big part. It's that classic be a fish in a big pond. You don't have to own the pond, right? Let's all participate in this ecosystem, because I think the scale and the growth that we are going to see over the next decade is so vast and so ginormous that we have got room for, $100 billion companies to be built just as participants in that ecosystem and providing these technology services. So yeah, be a TSP, stop being a fintech. That's my advice to anyone today, for obvious reasons.
One thing you spoke about is the matching algorithm, right? So I'll take this opportunity to speak about one of the very unspoken or less spoken features on the OCEN side.
Yes.
we solve this at the network level where a lender participating can give the filtering criteria, that is the screening criteria, to the borrower agent or the loan agent, whatever you want to call them, based on what role they perform in the network. And that is not the underwriting thing, but that's the screening thing. That's the minimum eligibility criteria, if I were to call it.
Yeah.
And uh, it is very simple for a borrower agent now to look at a standard loan application and filter out loan applications and propagate it to all the lenders who match the criteria, which is what was a lot complex few years back, where you would have to build that internally. But on the network, when a lender is participating, they would give their qualification or eligibility criteria for ticket, where they would say they would require a bureau score of XYZ, or they would look at ticket sizes between X and Y, and so on and so forth, right? It could be any data attribute that you could potentially look at. So that's something that we've done with OCEN. So hopefully that's problem not to be solved by the loan agent or the borrower agent, and to be done. One last thing before we close, and obviously have the closing comments, is we talk about intermediaries. When we talk about intermediaries, we talk about trust. What do you think? How these two intermediaries? So there's trust between participants. There is trust between the borrower here in this case, very specifically, and the lender. How do you think this balances out, or do you think OCEN solves it, or at least it is in the direction towards solving it, or how does that trust build with intermediaries? Because most of these digital networks don't succeed as much as because they've not been able to build trust on the network, right? So what do you think with the borrower agent and the other things that we are doing with respect to the architecture and the components built on OCEN? How do these intermediaries and trust go hand in hand, or are we going in the right direction? What is your thought on that?
So you're absolutely right. Like lending in every form, in every market, in every segment is a trust business. It's trust both ways. It's trust between the lender and the borrower, but it's also trust between the borrower and the lender. We've seen it ourselves over many, many years that building a trusted relationship with the borrower as a lender or intermediary is frankly the number one risk mitigant. COVID was such a great test case for everybody. You saw this very interesting behavior when the moratorium was announced, where you suddenly had customers who had a choice whether to pay or not, right? They had a legally protected choice as to whether they wanted to honor their commitments to the lender. What you saw is lenders who had built a great brand and a trusted relationship with their borrowers had far, far, far higher repayment rates than folks who were, I would say, more fly by night, to use that terminology, but people who had just focused on growth rather than going deep into the borrower relationship. What I think, again, platforms like OCEN do is they open up an opportunity for participants. And again, it's the middlemen, it's people like the borrower agent in a technological construct to be that trust builder with the borrowers, right? That's actually genuinely a function now. It's a role that needs to be performed. Again, I think over the last few years, given the high growth that we saw, especially in consumer fintech, trust was forgotten about. It was all about grow, 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 grow. Now we're in a completely different era. And you are seeing now, particularly, fintech platforms, realizing that just acquiring new customers is meaningless. You need to go much deeper into the relationship you have with the customers that you have. And that is all about trust. And so I hope that what we will see is, again, an evolution of fintechs looking at their role in the ecosystem, and part of what they bring to the platform as the ability to build trust. And that's a very fun problem statement for a product manager, right? Building trust in a product is really, really interesting. It's got lots of features like transparency. For example, if you're able to show the borrower, this is how much you've paid down today, this is your interest, this is your principal, things like this. These don't exist. This type of UX doesn't exist today. If intermediaries can be the providers of that UX and build that trust relationship with the borrower.
Interject you there. Not just there, it is also to do with what offer you should select. Is this
Exactly. Yes. Transparency of product, of pricing, of offer. Exactly. And again, I'm sorry to say, as an industry over the last few years, that was thrown out of the window, right? Because it was growth at all cost. And you almost got the opposite behavior. You lost trust of borrowers because transparency was so poor. So again, I think that what people miss is that Oaken has solved so much of the big infrastructure piece that now it's time to solve these more, they sound a bit wishy-washy, but they're truly the innovations in product that get me excited, which are all around how you have that relationship with the consumer. And ultimately, that's what drives low risk and good collections practices. Every lender knows that. So I think it's really exciting. I think the idea of high trust agents as intermediaries is just such a new concept and something that we should be pioneering as an industry. And I think it's up to, again, fintechs to kind of shift the mindset from just, growth at any cost to quality growth that relies on relationships and depth of relationship. And that's what intermediaries can bring to these systems. So it shouldn't just be an anonymous platform. It's a platform that acts as a jumping off point for a lot of relationships on both sides, lender and borrower.
So to add to your point, we've also building a world-class system on dispute resolution, which will
Brilliant.
improve the trust, not just borrower and lender dispute resolution, but participant-based dispute resolution as well. There is a dispute resolution between multiple participants, and hopefully we'll put it to test, and hopefully we'll succeed with that. So, what are your closing thoughts? And we've spoken about a lot of things. How would you like to close? What are your thoughts if you were to answer something or speak something without a question?
I think just to say that the work you guys are doing is not just, exciting and nation building. And we all know the problem statement and what you're doing to run fast towards the solution. I think I also want to say that the timing has never been better. What you have seen, unfortunately, over the last few years was this, almost alarming growth in unsecured consumer credit. I think we've got to a point now where there is a lot of discomfort from the RBI and from the industry about the levels that we got to in that entire ecosystem. And what that means is, and I've been speaking to lots of traditional lenders over the last few weeks, but what I have observed is they have never been more open, more ready, and more excited about the idea of things like cash flow based lending. They are suddenly looking at the idea of things like, I call it, virtual secured lending, right? So it's the concept of secured lending to businesses, which they've always been comfortable with for generations. But how do we take that to the next level? How do we show them that an MSME can be as safe a bet if we use their virtual data as security? And this concept is really taking off across some of the most traditional institutions right now. And that gives me a lot of excitement that I think the next 10 years, we're going to see a much more thoughtful type of growth. And we're going to see much more risk appetite for exactly the products that you and Sharon have been literally banging on about for the last 5 years. And I think now is the time. There's literally never been a better time from all stakeholders' perspective to see genuine growth and safe, stable, secure growth in this entire segment. And I think, you've done great work. So thank you for being the path bearer of that. But I think it's really going to start to bear dividends in the next couple of years. We're going to see an enormous unlock in MSME credit thanks to this short-term cash flow based lending. And we should all be excited to be part of that.
Thank you. Thank you for the kind words. And this what keeps us excited as well. But I'd like to say that it's not just Sharad and myself. There has been a plethora of volunteers. There have been a few companies who've contributed to this as much as we have, or probably more. Yeah. And there have been people in the past. I mean, I would like to name one company, that is JustPay, that they've done a phenomenal job at working at the initial spec and getting GEM as the first live case where people could actually believe that this is a viable business to do, right? So it's not just a few of us. There are a lot of people under the wraps who worked and got this thing delivered.
Brilliant. No, it's happening. We can feel it. So timing is everything. And I think we've finally got all the pieces of the puzzle coming together, and it's going to be a very exciting next decade for MSME credit.
Thank you. Thank you for your time, Lizzie.